Yo, smart money traders. What's going on? What's good? I'm just over here waiting for price action to hit my trading blocks, the London kill zone and or the New York kill zone. I have a few more hours before that happens. As you can see, new day started. I'm over here on the 60-minute chart, GBPJPY, and I have my trading blocks marked out in either the green or the red vertical color there, and they print as soon as the candle hits the trading block. These colors will start printing out for me automatically, and it's kind of just a marker to let me know I'm there. And I'll be using that to do some practice trades and a little bit using the RSI. But yeah, just kind of I'm trying to sit on my hands over here and not take any trades outside of the kill zone. And I figure, why not scroll back into the charts, use the bar replay feature on TradingView here, and try and take some practice trades. I'll be using price action. I'll be looking for structure breaks, retests, some Fibonacci, and kill zones, and if I see something good on the RSI, I'll probably take a few trades based off of that too. So you can see I'm as far to the right as I can go. March 19th, 2018. This is current H1 candle playing out now. What I'll do is, I want to make this super random. I don't want to cheat or anything. We're going to take the wins, we're going to take the losses. We're just going to see what happens. And let's see if we can net some positive pips. So I'm going to start scrolling to the left, just into a random spot. Hopefully there's no way I can know what's happening in the price action, as far as like trends. Or I'll even make the bars bigger. This is even harder to read. Catching a nice big trend, won't be able to tell this way. So this is pretty random. It's pretty far back. Let's see. The date is 7/17/2017. Let's go back even farther than that. This is July of last year. We can keep going. A lot of time in these charts. Able to scroll back really far. Let's see. April 25th. So I have to exit my full screen so I can grab my bar replay tool, and then we'll hit the full screen. All right. So we're at April 25th, 2017. I'll go as far as I can to the right side of the chart. That'll take me to April 26th, 2017, at the end of the New York kill zone. Set my bar replay marker, and everything from pretty much end of New York kill zone, April 26th, to today is wiped clean. And we can now start to do some bar replay. Okay. If we zoom out as far as we can see a downtrend and then a break up to the upside here on the H1 chart. We will say that we were just based off of this low to high move here, we'll look for long trades only. We're looking to take long setups only. So I have fractal highs and fractal lows, swing highs, swing lows. Blue triangles are swing highs, red triangles are swing lows. And I want to look for some nice breaks in price structure. You can see one here. It's kind of what I'm looking for. I'll take the fractal swing high and come across, and we have a break there. Created a new fractal high and broke that as well, without really a chance or a correction to get in the trade at a better price. This move is just that strong. Creates two more fractal highs and breaks again, and it's kind of consolidating up at the top here. Little consolidation in there, I'd say. Okay. We can see that our RSI is showing a little bullish hidden divergence here. Bullish hidden divergence there, and we have a bottom here now. Okay, so we have the strong bullish run, we have this nice break in structure here, and we have this nice break here, along with the bullish hidden divergence. We'll say we are looking for bullish setups. Let's get the Fibonacci tool. Take the swing low here. Take the swing low here. And say if we were to follow the highs there, we see no entry. Hit the next high. No correction, no entry. We follow the highs. No entry, no entry. And we go right on up to this tip of that high. Alright, so based off of that fib, no entry was given. We have more swing lows. So here's a swing low to a swing high with a break of structure. Here's some swing highs. We got a break of structure there. We have a swing low and a swing high. With a higher high being made, we take the low, we pull up to the swing high, and we come across. And let's get rid of this Fibonacci. Okay, so if we were to fib the most recent swing low to swing high, or just before, and then we're able to come up to this. Okay, now the most recent swing high, we can see that we had an entry on this kind of almost a doji, right? We had an entry here on that candle there to go long. If we entered at the 705 fib and set our stop loss at the 127, I'm actually going to change that to 144. I'm actually going to switch 147 to 144. I like 144 better. 127, we didn't get stopped out, as you can see. We didn't get stopped out at 127. There was, from this wick to our stop loss level, we didn't get stopped out. So, not really. I just like using the 144 better. So, drop this down. Okay, so we open up the chart, and this trade, this long setup, was already playing out, and that's what it looks like. What we're dealing with is a possible entry. Do we want to enter at this level here? Do we want to come in at 142, 960, 970 about? which would change our risk-reward ratio box to there. Stop would be 70, 80 pips now. With if we run a full swing to the opposite side, -1, we would have less than a 1-to-1 risk reward. So I don't like that. We showed up to the party a little late, but now we can advance the bars. Let's get rid of these horizontal lines. We're still in this consolidation, coming out of the New York kill zone. I do see some regular bearish divergence. Do we want to trade counter trend? Let's see. Let's throw a fib on. Okay, throw a bearish fib, and that would be, we don't have any breaker structure. No, oh, we have a breaker structure here, right here. We can pull off of this. So we had a breaker structure there, but the pullback was greater than 618, which I don't like. I'll show that on the fib. High to low, high to low. Okay, and the pullback is greater than a 618. Actually, getting up close to the 144 stop level. Do we want to take this short? What is our risk? Because we are at the 79 fib level. What would our stop loss be if we were to enter now? Enter at 142.950 about. We have a really good entry if we're taking this for a short above the 79 fib. Alright, let's pull our fib out to the end here. And try and identify some support levels for sure. I would mark this candle here as a support level. Potential take profit area there. This could also be a support candle here. That could be a support candle there. Our stop loss is 40 pips. And if we were to take profit at 0 fib, we'll be looking at 1 to 1.5 risk reward of 62 pips. 40 versus 62. Do I want to go counter trend off of this structure break? It blew past the 618, made a new high. I don't like it. I don't like it for a short. Coming out of New York, we could get a drop. I don't see a... Well, this will probably be a swing high candle. This will be a swing high as soon as this closes. So if I advance one more bar, a blue triangle will probably show over this high here. Let's advance one bar. Okay. And we didn't take the short. It's a good thing that we didn't. Could we have gotten in on this long anyhow? If we pulled fib from here. Okay. Yes, we could. But our risk reward was below 1, so that wasn't a good trade. At this point, we have made a new high. We've broken fractal highs here. What I want to see is a blue arrow or swing high made, and a fib from the swing low to whatever new swing high is made. So advance. Do we have one there? We have a swing high there. Okay. Now, hopefully, price will return to the optimal trade entry zone. I'll go ahead and put in a risk reward box already at the 705 fib. Check my stop loss level. That's 86 pips again. 0 fib is still under a 1-to-1 RR. I don't like this trade. Let's see if a tighter swing low to swing high will be printed. Advance forward. Okay, we're in the optimal trade entry. Let's put our risk reward box back on and look at it if we were to get into the trade here. I see some bearish or bullish, sorry. I see some bullish hidden divergence here. A little bit of bullish hidden divergence. It is testing this where the two boxes come together and make this darker shade of blue. It is testing that and rejected. Let's see, what time is this? What time of day is this? This is 10 a.m. Asia starts in 2 to 3 hours. Do I want to take a long here? What if we were to move our risk down to 34 pips? I don't have the greatest feeling about this trade. Okay, say if we're coming out here and then add the spread, which is 7 pips. GJ on FX Glory. We'll just say 50 pips. Are we willing to risk 50 pips going long out of the New York kill zone just before Asia? We have long confluences in the way of trend, hidden divergence, optimal trade entry, and And we have higher highs being made. Let's see if this, we'll give it one more H1 candle to see if this current candle will turn into a swing low. Okay, that turned into a swing low here. So we could enter, so we have a swing low here and a swing low here. That's two swing lows. Stop loss would go just under 34 plus 7, be 41. 41 pips. 34, 46. Let's just say 43 pips. So stop loss plus the spread. Our stop goes here. Entry gets bumped up to there. We're now risking, and to get a 1-to-1, we would need to hit there. Let's shoot for a 1.3 to 1. And let's take the trade. Alright, advance the bars. Okay. So we're in profit. 21 pips. 21 pips so far. Should we put a stop loss in profit? Put in a stop profit. RSI. No signs of bearish divergence yet. Advance. Swing high. Will it close above this swing high? Okay, looks good. Let's hold it. And we are at. Okay. We got a 1-to-1 for 68 pips. Let's close the trade there. We'll close that trade. Let's adjust everything. Adjust our boxes. And we'll say 1-to-1, 68 pips. 1-to-1 plus 68. And we'll make that green. So 1-to-1 plus 68. Okay. So we have a break of the swing high. Break of that swing high, but no close above. So and we're in the Europe kill zone, the London kill zone. Divergence suggesting, is this any kind of divergence here? And I'm going to go from close to close. I do see some bearish divergence there. Okay, so if we were to go from a swing low, actually from a swing high to swing low, swing high to swing low, swing high to swing low. Let's throw our risk reward box on just to get some numbers. Okay, we're currently here. Stop loss at the 144. Give us 45 pips and a return to 0 fib. We're looking at, we're looking at a 2.25, 2.28 risk reward with 44 pips to the stop loss. 100 pips to 0 fib. With no swing high. Okay, are we willing to risk? 44 pips? I don't want to, just because the uptrend is so strong. I don't want to take short trades right now. I want to see breaks to the downside, retests, and more breaks to the downside before I start taking short trades. Okay, we got more upside. We can actually get rid of these boxes here. We'll find some new support and resistance zones. So I can run a fib from the swing low here, the most recent swing low, and it looks like we've closed above the previous, no, yeah. Well, we now want to close above this swing high. So this is our new swing high. And let's advance. Okay, we have a close. Let's follow it. And that should now become a swing high, a fractal swing high. Let's see if price will return to our OTE. Okay, we have a swing low. And we can, let's go a few more bars. See if we get another swing high. Now what we can do here is we could move our fib, but we have a lower high. If price comes down and puts in a lower low, then we have a down move, a short-term down move starting. Price could come down based off of this swing low to swing high into the optimal trade entry, and what would the trade look like if we took it at the 705 fib and we went long at the 705 fib. Our risk, we're looking at 34 pips risk. Back to zero fib is under a 1-to-1. 0.27. No, if I don't even get a 1-to-1 back to the zero fib, I'm not interested. So we'll get rid of these fibs and let a few more bars run. See what happens. Okay. Looks like more bullish divergence building. Another swing high. Same level. Another swing low, consolidating. Alright, the swing highs and the swing lows are consolidating. So I'm not interested in any trades now. I want higher highs or lower lows. But these highs and lows are building inside of two other fractals. So this is consolidation. I'm looking for a break outside of this fractal or this fractal here. I'm looking for a break outside of either one of those. Because right now, price is consolidating inside of two previous fractals. So I'm not interested in anything right now. And we're in day 3, London kill zone. Let's check our RSI. Any clues? I don't really see anything. Maybe 51% bullish on the RSI, but 51%. I don't like that. Okay, we have a break to the upside. I like that. And now we can hunt for swing highs. So now we have a swing high established. We can go higher low. Higher low, higher low, higher low, until we come to the highest low and new swing high. Drop a fib in. And we missed this little London bump, but that's okay. We want the market to show us, we want the market makers to show us their hand, and then we snipe. Okay, so I have a Fibonacci on the swing low to the new swing high, and we are watching for a potential move back to optimal trade entry. I'll just drop the long or risk reward box in at the 705 fib to check my numbers. 72 pips to the stop loss. And okay, it looks like any trade from the 705 with a 144 stop loss is going to be just about 1-to-1. So let's give it a 1-to-1, 72.9, or actually, yeah, 72.9 pips. If price retraces or corrects back to the optimal trade entry, we'll run the bars forward. Okay, we're in the New York kill zone. So we see price approaching the previous resistance, which now might play out as support. I don't really want to, I mean, it looks like that could be coming in at around the 50% or equilibrium level, but uh, for risk reward purposes, I'd rather wait to see if it'll come into the optimal trade entry zone. Let's advance the bars forward. And just as a side note, I called it a TP here on trade number one at plus 68. But if we were to let this trade run, we're looking at 140 pips if we didn't take the one-to-one take profit, and I were to just let that run. Just a side note, I just wanted to point that out really quick. So we'll set this back down to our one-to-one risk reward across at the 68 pips level. This trade here, 73 pip. Okay, and another thing, these two swing lows here, swing low and a swing low. Price is gonna take a little bit of work to come back down to these levels. So a little bit of support there before it actually come down to these two swing lows. So I will actually bring my stop loss up just to minimize risk. We'll say to the second swing low is 33 pips. This pair on FX Glory is 7 pips spread. So I'll go to 40. That's 7 pips. And I'll throw another pip, 7 pips. 47, we'll just say 50 pips. So instead of 73 pips risk, we're now at 50 pips risk with RR of 1 to 1.45. And we still haven't made an entry. Okay. We have a tap at the 618 fib. I didn't set my risk reward box there, so I'm gonna call it no entry. Now we certainly could have entered on the 618 fib, but I just prefer the sweet spot 705. So I'm gonna call it no entry. Let's advance and see if it makes another run, the OTE, or if it'll make a new high, or maybe even stop us out. All right, swing low. Swing high. Okay. So we have an all new setup here. Our side looks like we have the bearish regular divergence building, but we have new highs being made. So I'll take the long position over the short with bullish hidden divergence. I'll take the bullish hidden divergence over the bearish regular in an uptrend. So what we can do, this is quite a big bull run, and price needs to correct at some point. And to keep buying into this, I'm unsure because I know a correction is needed. Hit 68 pips on one trade here in 3 days of trading. 25 to 50 pips is a good goal for a week. I'm going to say I won't take any more trades until I see significant amount of bullish hidden divergence on my RSI, and then I'm interested in taking trades again. So let's go ahead and I'll probably wrap this video up pretty soon, but I just want to go ahead and see what would happen if we were to let the RSI run down into this area here. If we're to let the RSI run down into the blue box I just made, would it present more opportunity for more long positions? And we'll pull a fib from put one big fib like that, and we'll see what happens there. Again, if we're to let this original trade run that we took on the second day, we would be at around 158 pips running. Where did we stop at? 68. Okay, there we go. All right, so let's run the RSI and see what it looks like when it reaches oversold. Okay, woo, that was quick. That was quick. Okay. So we have a deep. Our side just bombed into the oversold, and put in bullish divergence on all of this, all of that there. Put in bullish divergence on all of that there. Okay, if I didn't advance the bars ahead so quickly, we could have put a fib from the. You know what? Let's go back. We were about here. We were about there. And let's go at a time. Okay, and our plan was to let the RSI. Okay, and there we go. The plan was to let the RSI run into the blue box. We can take a fib from our swing low here up to most recent swing high, and we had an entry at the 705. Oops, sorry, wrong box. We had an entry at the 705 Fibonacci there with a 50 pips stop, and our 1-to-1 comes in at 1-to-1 comes in at just at the 0 fib. Just at the 0 fib. Okay. Play ahead. Little drawdown. And we are in profit. 24 pips. We have 2 swing lows made. 1 and 2. Go here. And at spread, 29. 22 plus 7 is 29. And then I'll add another 7 to that. 36. Now at 36 pips risk. And 24 pips floating with the 55 pip take profit. Okay. So what I see is a potential head and shoulders, I want to say, actually starting to form. Possible head and shoulders. We're so far up in this bullish run that I actually want to wait for a nice big correction, or potentially signs of maybe a downtrend starting, a midterm downtrend. So I'm going to take profit here at 15 pips. I'll take profit at 15 pips on this trade. And in about 1, 2, 3, about 3.5 days, we netted 68 plus 15, 68, 78. What's that? 83 pips? 15. This was a plus 15. Whoops. Plus 15. 68 and 15s. 68, 78. Plus 5, 78, 83. 83 pips. So within, let's say, that time frame, netted net positive 83 pips and 3.5 days. And I'll cut the video here. But trend trading using break and retest of structure, corrections, Fibonacci corrections into optimal trade entries, and fractal high and fractal lows with a little bit of RSI just for divergence, but trend following divergence. I very rarely trade regular divergence or regular trend reversal divergence. I rarely ever trade trend reversal divergence. I mostly look for trend following hidden divergence in a trend. So 2 trades, 3.5 days, net positive 83 pips, 25 to 50 pips a week at 2%. And yeah, I'll cut the vid here. Peace.